Hey there, YouTube. Welcome to the Kevin Strong Show. And in this video, we're going to talk about a teacher who took early retirement. That's right. She decided to retire at 58 years old. We're going to talk about her plan. Actually, go on to her YouTube channel where she spoke about this. I made some comments. She replied back to my comments. I'm going to share those comments with you. And I think she's potentially making a big mistake. So here is the setup because I can't show you the entire video because YouTube won't allow me to do it. So she's 58 years old, saved about $500,000. Congrats to her. Part of her retirement plan to retire early at 58 is this. So some of that money that she saved up, she's going to go into some CDs and invest in those areas, kind of get some small returns on her investments, which is a variable. You know, right now, CD rates and T-bills are offering very attractive rates. This time next year, I would surmise probably in the next 6 months, it's going to be very difficult to get a 1 month 5% T-bill. You won't be able to lock that in because when the Fed eventually does decide to lower rates at some point within the next 6 to 9 months, if not sooner, those rates on those T-bills and on those CDs are going to go down, which is going to basically give you less money. But her setup is, to make a long story short, this lady's got $3,400 a month, which isn't bad. 3,500. So projecting that out over a 12-month period, you're looking at roughly a little bit over $40,000, like $42,000 a year. She feels she's comfortable living on that, and she would be okay. My reply to this was, hey, congratulations, because you don't want to come off as a troll, but you know, I'm more of a numbers guy. So this is some of the stuff that I shared with her. Have you calculated how that money, how inflation is going to impact your fixed income over a long period of time because you're retiring so early? So this is what I said before we go over to the video. The historical average for inflation from like 1970 up to 2024 is roughly 3.3% on average. Sometimes it goes a little bit higher, sometimes it goes a little bit lower, but that's the historical average for inflation. So what I decided to do was I took 3.3% and said, hey, what if on average you take that $42,000 and factor in inflation at 3.3% for the next 20 years? You know what the number is? The lady, when she's 78 years old, is going to need almost $84,000 to live the same lifestyle that she has right now. Now, that's just projecting a 3.3% inflation rate. You and I both know that how much is healthcare going to cost 20 years from now? I understand Medicaid, Medicare, and all this other stuff. You know, you got Part A and Part B and all that other stuff. But the point being, when you're probably at your most vulnerable place in your life in terms of being susceptible to injuries and illnesses and things like that, because you're getting old. At that point, this lady's going to be almost 80 years old. But your income's going to have to double. Can you double your income on just CDs and T-bills? Have you factored that into it? It's going to be interesting to see what her response was, and I'll show you in the comments, and then we'll talk about it. Then we're going to slide over and talk about some stock picks. I think I had just Ford, and that's kind of flat right now. I'm thinking I'm actually going to have to sell that for a loss. And I've got some recommendations for a couple of stocks next week, 3. So let's go over here and slide over here. And I'm just giving you the end part of where this lady's at. Once again, you can see here right on the screen, she says my expected budget is about $3,400 a month, is after taxes, is a little bit overestimated. I round up most things. Okay.
Is a little bit overestimated. I round up on most things. I could get by on $3,000 a month if I had to, but my hope is to create a couple streams of income. At the end of this month, I'll go over the breakdown of my retirement portfolio in another video. It was just too much to fit in a 10-minute video. I'm going to give updates every month. So this is my rough plan for income in retirement. I do make changes periodically. If you're new to my channel, hi, I'm Julie and this channel's Happy on Monday.
Okay. I'm going to show you my comments to her and what she said to me. But here's my point. You hope to create a couple streams of income. This is the problem with middle class America. I'm not trolling this lady. I'm just using this as a teachable moment. In the lower class, we go on this hope. I hope things work out. I hope I can figure it out. When you're retiring early, when we're dealing with 40-year inflation, you don't hope for any damn thing. You have a proof of concept of a side hustle that is measurable, scalable, and somewhat quasi-recession proof. And then you factor that income into your retirement plans. Just like I've shared with you guys on previous videos talking about, I'm taking myself as a serious student of the stock market and understanding trading and all the intricacies that's involved in that, so I can continue potentially to make a six-figure income part-time just trading stocks. I have other investments and a pension and some other things that I'm going to be dealing with. But my point is, I'm still working full-time now, and I'm developing that proof of concept. I'm developing that skill set. So if and when I retire in the future, I'll have a reasonable expectation based on past performance. Once again, proof of concept, what I think I can project on a monthly basis from trading. And then that will be supplemental income to all the other things that I have lined up for retirement. It won't be a necessity. It'll be a supplemental income. So I'm going to go over back to the screen here and show you our exchange. My thing that I set up here was just a big snapshot of what I just told you. I just basically said, you know, a 401k and a 457 plan. These plans are not, they're just plans. They're not tax strategies. Taxes will more than likely go up in the future. Back to our USA mindset. We are taught to delay retirement because of a lower tax bracket. Isn't it better to make $100,000 a year or more in retirement and pay more taxes, a higher net return? Your monthly retirement income overseas will provide you a 5-star lifestyle. You guys already know how I felt about that. So, and then down here is where I tell her that, hey, you need $83,000 in 20 years from now at 3.3%. Her reply, listen now, I hear you. I have the same fears, but I just don't want to move away from my family and my grandbabies. I know this is a touchy subject with a lot of women, but this is after 9, after 10, after 11. Those grandbabies will grow up, get married, have their own kids, not call you, will not want to come over your house because you smell funny. I don't want to go over grandmother's house. She's like, at least that's how we say it in the hood. You guys might say it a little bit different. Hey, I don't really want to go over grandmother's. Pick your ethnic background. The point is, you don't want to go over there because that bond that you had when you were a child, that wanes, that goes away as they get older. That's a natural thing. They grow up and they have their own lives. You don't set up your retirement based on something that you know is short-lived. Hell, everybody knows who have kids from the time they're like 8 to 13. By the time they're young teenagers, they're gone. They don't want to be around you. They don't want to be around your friends. So hey, this is how it is. So I'm gonna go back to this once again and say, complimented, said she looked young for her age. I said your grandkids will eventually grow up. They won't call or want to be around you. Facts in most cases. And your own kids will eventually see you as a burden in most cases. And if they don't see you as a burden, if you have financial insecurity to the point where your children have to take care of you because you didn't take care of yourself financially, aren't you robbing them of their quality of life as they get older? I digressed. Okay. So she says, thank you. I said, let me see, wait a minute. What else? What's up here? Oh yeah, that's just me. So she just basically saying that was just her comment. I just added, I said, being close to family at the expense of not outliving your money is a dicey decision. The Western society does not respect and honor the elderly. I wish you all the best. And thank you. I agree that Western society does not take care of the elderly the way other cultures do. This is her responding to my last message. Hopefully, my kids won't have to take care of me. Come on now. You see what I'm saying? So you're hopefully. So you haven't factored in inflation. You know this is kind of dicey and you're doing a little bit early, but what the hell? You're going to throw caution to the wind because you want to be near your grandbabies who in the next 5 or 6 years are not going to want to be around you anyway. At what expense? And then you're hoping not to be a burden to your kids as you get older. Why don't you make sure or mitigate the possibility of you being a burden to your kids? This is a classic example, as I said before in previous videos. 10, 15 years ago, somebody had $1,200. They were living in a mobile home and their lot rent was $200. And, they were going to bingo every night and they were living it up. Inflation eats away at that money, and then you see yourself as a victim. Most people cannot outlive will not outlive their money, and you cannot outrun inflation on a fixed income. This lady's in a very good situation now. I'm assuming their house is probably paid off, but this could quickly, in the next 10 or 15 years, do a 360-degree turnaround in the negative. I think she hasn't factored in inflation. I don't think she has a proof of concept about these side hustles that she hoped. And I think a lot of this is just based on emotions. So didn't mean to troll her, but I just wanted to use that as a teachable moment. Let's go ahead and slide over and wrap this up, talking about stock market and the simulation challenge. Okay, here we go. So I think last week, the only thing I recommended was Ford. And I did was something is like I bought a put at I think $12, hoping that Ford would go down. There's a time decay factor when you deal with options for those of you who are following it. And it's just not moving much. As you can see here, it's kind of consolidating throughout the week. And as you look at the MACD, for those who follow that, it looks like it's getting ready to turn up, which would be negative against a put because I was hoping that it's going to go down. So I'm going to probably have to cash out of this thing next week at a loss. What am I looking at or monitoring? I think American Airlines could be potentially interesting for a couple of days. I don't know yet. Let me see. This thing didn't go in there yet. Hold up. There we go. This was a big drop and it's consolidated like an L. This is called a bull flag. Bear. I stand corrected. This is a bear flag, which basically means this could drop significantly lower. However, the MACD is confirmation on the way up. So if this thing starts to perk up probably around Tuesday, or if I get a buy signal, I will probably jump in on something like this and buy a call and go long on it. That's a watch and see. Costco, I would do a this looks like it's getting ready to roll down a little bit. And once again, this is above the 200. It's still on its way up. So the technical position you would take on something like this for those who do option trading would be a bear call. Make sure I say my verbiage right. I think this might dip a little bit, maybe by Monday, Tuesday, but not much because it's still trending up. This is the 200-day moving average, but I'm betting on this inside candle closing below the previous high. And you've got the MACD here that looks like it's going to roll over, but we don't have confirmation yet. So that could be a watch and see on Monday. And last but not least is Dow Jones Industrial Average, which is DIA. Very strong here. You got a double bottom. It's looking like it's going to swing up. 200-day moving average is in a positive direction. And the MACD has confirmation. So this may be something out of the three that I talked about. If I had to put them in order, I'd go DIA. And then I would take a bear position on Costco. And then, like I said, American Airlines symbol AAL is a wait and see moment. Let's wrap up by talking about the simulation account. So I only did one trade, this week. I don't remember exactly what day I did this trade on, but you can see here last week, if you go back and look at the video, it was around 253,000 and something, and it's at 258. I see I was going to try to get it to 260 in the next 2 weeks, but I almost did it in 1 week. This was probably about a $4,000 trade that I did to get it from 253 to 258, just for roundabout numbers. And that took me probably, in all honesty, folks, probably less than 5 minutes to make $4,000 on this simulation trade. So I'm very optimistic that I will have this well over $260,000 by next week, but the devil's in the details. So interesting video. Like I said, hey, this early retirement, do it at your own peril. I think this lady's fine for right now. I think she's making a lot of assumptions, and it seems like she's being led more so by emotions. And there's a lot of numbers that she hasn't put pen to pencil to. Pen to pencil. That doesn't make sense. Pen to paper. She hasn't put pen to paper and actually factor in inflation. And this is one of those things, you gotta set this stuff up, especially if you have some type of pension that's not going to give you a COLA, a cost of living adjustment. And we know that most of these COLAs still don't keep up with inflation, but it could potentially help offset a little bit of the inflation. So if you're new to the channel, welcome. And if you are enjoying my content, do me two things. First of all, if you're new, hit the subscribe button. I do typically release my videos once a week on a Saturday morning. And if you are enjoying my content, please do me the honor of smashing that like button and tell me. Some of you may disagree. You might say, hey, Kevin, I think this is a good plan. You only live once. I want to spend my time around my grandkids. I don't care about that. That's fine. But I'm here to tell you, when you're 78 years old, you're in a state nursing home because inflation is eating away at your money, and your bedpan hasn't been changed in 7 days. You're not thinking about all that goddamn ice cream you ate with your grandbabies. I'm just saying, it's gonna get kind of, you'll get kind of funky down there. So this was the Kevin Strong Show. Thank you for watching. Make it a great weekend, guys. I'll see you next week.